Wow, we got 26 people watching already, waiting for this one. Right on. 17 likes. Hit that like button when you come into the live stream. The YouTube algorithm will pick up the video to spread it around for more people to join in. And we can have a better conversation here in the comments section when there's more people joining in on the live stream. All right, so today we're going to be talking about whether or not the Federal Reserve is crying wolf when it comes to the credible threats. Now, in my opinion, when I think about this idea of the Federal Reserve crying wolf, like if you're not familiar with the crying wolf, it's a story from long ago where the kid comes down to the village to have fun by screaming, hey, there's a wolf, and everybody freaking out about it. And then one day he comes down and says, man, there's a wolf, because he actually saw a wolf and nobody believed him. Right? This is kind of like the idea of crying wolf, and that the Federal Reserve is really not giving off a credible threat, but just giving off the threat in general, and at some point, the market is not going to believe it. And the Federal Reserve will then lose their ability to conduct themselves in the fashion of using their words in that threatening aspect of it to guide the markets. Now, I don't believe this to be the case. I believe that the credible threats come from them actually having a credible threat. Now, to kind of give a kind of a gruesome analogy to it, if you think about it from being like a slave, right? And some dude's whipping your ass and he's telling you to go to work, you're probably going to go to work. And then if you work constantly, you don't get your ass beat. But the threat of it, right, of getting the whip is still there, right? It's still a credible threat, whether it's happened or not, and you're working your butt off or whatever. The idea that is still there, that there's a credible threat behind it, right? This is really where the Federal Reserve has conducted themselves. Like, they actually have the credible threat to back it. So when we think about like the use of the special purpose vehicles during the pandemic in the setting up of the corporate debt lending facility, just the announcement of setting up this facility to backstop the corporate debt market, putting the forward guidance out there, the signaling, the jawboning, right? Telling the media, hey, the Federal Reserve is going to be picking the winners and losers. Of course, they said that they were going to be protecting the fallen angels, right? But the idea that the Federal Reserve was going to come in and start buying corporate debt was enough to have the people out there attempting to front run the Federal Reserve, right? And by front running the Federal Reserve, they were actually the companies themselves, the corporations, were able to get funding before the Federal Reserve even set up the facility, before they even had the special purpose vehicle set up to do the corporate debt lending. So just the idea alone that they were going to do this was enough to then bring in the funding that these corporations needed. But it was the actual credible threat that they were going to do it, because they were going to do it. They had the money, they had the facility, they had the option, but they didn't use it. They didn't need to. See, this is how the credible threats work. And so the Federal Reserve needs that credible threat, that actual ability to do what it is that they say they're going to do in order to guide the markets appropriately, right? The idea that they are going to be lowering interest rates. Think about it like this. How many people said that the Fed had pivot? How many people actually said that the Fed pivot? Like back, 4 months ago, 5 months ago, right? Now, I mean, it's just like you go back and you look, and I don't want to name names because there's plenty of economists out there who are completely like talking about the reversing course and now, moving back into stimulation and stuff like that. 5 months ago, the Federal Reserve didn't do it, right? They had stalled out on the raising of interest rates. That's it. They had stopped, right? They didn't lower interest rates. They didn't raise interest rates. They just stopped moving. And now the perception out there is that they went into a pivot. Now, this is what I find interesting, is that even when they stopped raising rates, think about this for just a minute. When they stopped raising rates, they said, we're going to wait and see if this is an appropriate level for the Fed funds rate. The only way that the Federal Reserve could know if this is an appropriate level is to wait 6 months to a year to find out how that is impacting the economy, because there is a lag to the Fed funds rate. See, the moment that the Federal Reserve adjusts interest rates or stops adjusting interest rates, there is a lag from the time that they do that to the time that it actually impacts the economy. And that could be 6 months to a year down the road, maybe even a year and a half. So right now, we are just starting to feel the effects of where the Fed peaking of interest rates would be in the economy. We are just now starting to feel the effects of it. And so this is where the Federal Reserve is looking for the data, right? That wait and see approach. This is now where they are going to find out whether or not that the Fed funds rate is an appropriate level. And even if they were to adjust it now, yes, the market's perception would be very instantaneous. In fact, it's, taking off right now or dropping right now just on the idea of what it is that the Federal Reserve is going to do. But the actual impact to the economy would take anywhere from 6 months to a year down the road before it would ever have any kind of real impact. So all these people who are saying they're going to lower interest rates for the election, why? It might do something for the markets, but it's not going to do anything for the real economy, right? It might do something for perception, but nothing for real. No real adjustment to the economy. And so now the Federal Reserve is looking at that, right? They're looking at that lag. They're looking at whether or not the Fed funds rate is at the level that is appropriate to conduct their monetary policy. And we have to remember that an appropriate monetary policy is not a 2% target. And just like everybody seems to think that, the Federal Reserve is going for this 2% target, they're not. They're going for a 2% average inflation rate over time, which means that appropriate monetary policy may be slightly above or moderately above 2% for some time, right? But it's not defined what moderately above 2% is, and we don't know how long some time is, right? So this is now essentially arbitrary to the Federal Reserve, and whether or not they feel that their monetary policy is appropriate for the current state of the economy. Very different from what a lot of people want to think out there. They want to think that, the Federal Reserve has lost control, that they have no idea what they are doing, that even the credible threat, like I want to thank Johnny Ray Bum who brought this question up, like whether or not that the Federal Reserve was crying wolf. Right? And I think to myself, they can't cry wolf. They cannot not have the actual credible threat, meaning that they will do it if the market doesn't. Just like the special purpose vehicle out there, if the market didn't step in and start buying that corporate debt, they would have, right? But just the idea that they were going to be there was enough to bring in the willing market participants, just like the Treasury bond buyback is going to do, right? Just the announcement alone of this taking off, once it really starts to ramp up and they put that narrative out there for the broad, media to cover, and everybody starts becoming aware of the situation that the Treasury is going into a bond buyback program, the way that is communicated out there ought to bring the confidence to the market, and the Treasury may not even have to buy anything, but they have to be in a position that is credible. They can't say, hey, we're going to go and buy back a bunch of bonds, but then not have the cash sitting at the Treasury general account to do it. If they were to say, yeah, we're going to buy back bonds, but then didn't have any cash, people would be like, what are you going to buy it with, right? But right now, because the Treasury is sitting on an insane amount of cash, just go and look at it. We talked about this yesterday in yesterday's video, right? Just go and look at the Treasury General account. Type in TGA and then put a space FRED, right? The Federal Reserve Educational site. And you're going to find that the Treasury General account, which is the account that the Treasury uses to pay its bills, is sitting on an insane amount of cash. About as much cash as they used during the stimulus packages. But they don't have a stimulus package set up. Like, they don't plan on deploying any kind of stimulus package, but yet they're sitting on enough cash to do it. Right? Anybody else want to wonder why? Maybe it's because the Treasury plans on buying back all those bonds and they need to have the cash on hand. And if they didn't have it, then they wouldn't have the credible threat that they would do it. And if they didn't have the credible threat that they would do it or could do it, then the market wouldn't be a willing participant like they're going to be. See, this is important to understand. This is how the monetary policies now work. Right? It's not about adjusting interest rates. See, that's where a lot of people are very confused about the economy and the Fed and all this other stuff. It's not a matter of adjusting interest rates. That's not an effective tool anymore. And it's really important that people understand that. right? And the reason why it's not an effective tool, because people think, well, of course it's an effective tool. If you lower interest rates, that makes it easier for people to buy houses and cars and go on vacation, right? It just intuitively that makes sense. What doesn't make sense is the neutral interest rate. And now this is the interest rate in which that the Federal Reserve is neither accommodating nor restricting the economy. And that neutral interest rate is really low. Nobody knows exactly where it's at. Some people say it's at 1 to 1.5%. Some people say it's at 2.5%, but nobody knows exactly where it is at. Point being is that even if the Federal Reserve was to lower interest rates 2 percentage points, they would still be above the neutral interest rate, which means that they would still be restrictive, even off of 2 percentage points cut, which there's nowhere anybody's even talking about that much a cut, right? And that would be if the neutral interest rate was elevated at 3% or so, right? But most likely it's closer to zero. And dropping interest rates below the neutral interest rate is just not an effective tool. It just can't get there unless they go back to zero, right? Unless they take the Fed funds rate back down to the lower bound and fire up the quantitative easing again, there is really no stimulation coming from the lowering of interest rates. However, the idea of them doing it does stimulate the economy. And that's what's crazy about it, right? And it's very important that people understand this because this is the way they're going to communicate it to us, right? It's not going to be in this surprise interest rate cuts or anything else like that. Because even if they were to cut interest rates today, it would still be 6 months to a year before we would see any kind of real impact to the economy. But think about what it is that they are putting out there for forward guidance, the signaling, the jawboning, the perception that people have out there. Think about it at the end of the year. How many people were convinced, absolutely convinced, that the Federal Reserve was going to be lowering interest rates this year? How many people are still convinced? Hardly anybody, right? And this is what I said that the Federal Reserve was going to use for their tools a long time ago. I mean, I've been saying this for years, that they're going to get to a point where they're going to keep the market very confused about where it is that they are going to be moving their interest rates because it's their forward guidance that now is their monetary policy. So long as people have no clue of what it is that the Federal Reserve plans on doing with interest rates, that keeping that open-ended forward guidance going, then anything that they say today will then guide the future markets. They want to have the economy feeling the effects of a lower interest rate. They will just put out the forward guidance. Hey, we are planning on dropping interest rates at the next meeting, right? If they put out that guarantee that they're going to do it, of course, they would have to come through with it, right? However, if they put out like, oh, we got this dot plot map, or we got all these governors coming out there and saying how we need to have lower interest rates, but they don't put any kind of real statement out there saying that they're going to do it, then that is an open-ended forward guidance that they can guide the markets any way they want with. And it totally works. Totally works. All right. 13 minutes into this. I'm probably only going to be out here for another 15 minutes or so. Brody says, hit the like on the way into the stream, everyone. Yes, please do so. Best regards from Germany, and thanks for educating the real shit. Thank you. Hello, everyone. Hope y'all are having a great day. Yes, you too, Mr. Horology. Welcome, everyone. Hit the like and strap in for the great stream. Feel free to submit questions, super chats. Gets priority because they are paid for. Thank you, All Nighter. I really appreciate that comment, man. Let's cruise down here to the bottom of the comments and see what we got. All right, I'm loving the price of lumber. I might build a storage space to store my extra lumber. Would holding dimensional lumber be a good idea? Yeah, holding dimensional lumber is a fine idea so long as you can keep it dry and like as long as you can keep it dry, keep the airflow kind of going through it, keep the bugs off of it, stuff like that, you can pretty much store it indefinitely. So yeah, storing lumber is fine so long as you can keep it indoors and keep it dry. And all right, what is that? KBK Kara? Hit the like button, folks. Thank you so much. All right, I wonder if Jay Powell watches this channel. Sometimes I've wondered that myself. Like, I mean, I do wonder about it because at times when I'm covering their speeches, I'm like one of the few people who cover it to the depths that I do. And I do wonder like what it is that they are feeling that people are Like, what is it that they think people are feeling from their speeches, right? Because generally those speeches and the things that they are talking about, it's to other bankers. They're not giving those to the public. Like, the public has access to them, right? News medias have access to them. I mean, anybody who wants to can just go to their site and read them. But very rarely does it seem to be like public knowledge, like put out there for, for public scrutiny or anything like that. Nobody really ever talks about them. And so, I wonder if, in order to get some sort of like feedback, from like what the general public might be saying, how else do you do that without following like a channel like mine who covers that particular speech and then we have a conversation about it? I mean, they could go and put it out there on the mainstream media, but that's very like, subjective. All right. All the people you think might be watching are watching. You can be sure of that, Yui. Yeah, I mean, I do. I am curious on it. I mean, all right. Staring out great as usual from Tennessee. Staring out? Staring out. All right. Jay Powell watches this channel, and technically Simon is the Fed. 4D chess. All right. How can the U.S. send aid everywhere and be in so much debt at the same time? That's kind of funny. To me, like, I'm surprised that they don't send out more money to more places to get those dollars out away from the United States. Like, a lot of times people look at, like, the efforts of the United States as some sort of, like, painful experience for the taxpayers and the people and the economy and all this other stuff when you see like the aid and the tax dollars just being spent to things that you may not feel like they benefit the United States. And that's true. Like the immediate effect of those things don't. However, it's not so much the idea of what the money is doing, but the idea of trying to get the money out of the United States. Right? See, that's where the problem is. It's Triffin's dilemma. Like, really understand Triffin's dilemma, and then things like what's going on as far as like money being sent out of the United States doesn't feel as ugly and as horrible as it does when you're thinking, man, these are my tax dollars doing this, right? Because when you think about Triffin's dilemma, there is an issue where the United States is the world reserve currency. Right? Now, regardless of what anybody wants to think or say or what they believe the future is going to be like, I don't know how many people asked me a couple of years ago that what I'm going to do in the next year or two when the dollar's gone. Like, I never believed it. Like, I never believed that the dollar was going to fail. I mean, there was a time in my life, but not recently, not pretty much since I started this channel. Have I ever believed that the dollar was going to fail or that it was going to lose that world reserve currency status? There will come a time in which that happens. I just don't see it yet. Right? And I don't see anything that's going to replace it yet. And so now the major problem that the United States faces when it comes to being the world reserve currency is, how do you get the dollars out to the rest of the world? Right? How do you do that? Now, you can give it to them. You can spend it, right? You can do all kinds of stuff out there. But the ultimate problem is how do you make sure that the world is supplied with that debt? With the dollars, because there is so much debt that is due in dollars. See, a lot of times people will just think, just screw it. Who cares? Screw them, right? Hey, they were the ones who made the bad decision writing all those debts in dollars. They shouldn't get our tax dollars. We should keep those dollars here. The problem is that the debts do exist, and the demand for dollars will explode if they are not available to pay off those debts. So now, if you can imagine the dollar exploding in value, you won't be able to buy the products of the rest of the world. And well, you can, right? You can buy the products of the rest of the world, but the problem with it is that if people aren't buying the United States debts, then we won't have any dollars to buy anything from the rest of the world. So this is where the liquidity crisis really starts to kick in, is that if there's not enough dollars out there to cover all these debts, then what you're going to start finding is that there's going to be either a couple of things start to happen, right? Most likely, there is going to be an extreme demand for dollars. At the same time, you start having debts collapsing, people going bankrupt and all kinds of stuff. And people talk about how painful it is and how business is slowing down and all this other stuff that has taken place that would be very recessionary or depressionary, have that appearance to it. And this is, again, is because we are not providing the world with enough dollars out there. See, sometimes I wonder if the Federal Reserve could even print at a pace that is fast enough to cover all the debts that are due. Yeah. And then what is it that they're going to do to buy? Like, what asset could they possibly buy in order to go into that sort of money printing? Like, are they going to ask the U.S. government, the Treasury, to go deeper in the debt to provide the U.S. Treasuries for the Federal Reserve to buy so that they can print up that money and distribute it out there to the world? Like, what is it that they're going to buy? I have a feeling that at some point in the future, we are going to find the Federal Reserve buying the debt of foreign nations, printing up U.S. dollars, right? U.S. Federal Reserve notes, and buying foreign debt and putting it on the balance sheet. And this is what I think the Federal Reserve is going to do at some point in order to provide the world with the liquidity that they are demanding. It's scary to think about, like when it gets to that point, and I'd imagine at that point we will probably be in digital currencies, and cashless society kind of stuff. All right, let's cruise down here. Did I get something there? All right, Growing Life Organic. Thank you so much for joining the channel. I haven't been very good at doing the members videos lately, but I'm going to get back on that again, and so I'll have some members only live streams and videos to post here for you in the next couple of weeks. Gotta love the UE show. Well, thank you, PM Galleria. I really appreciate that, man. All right, bro, I just spent time in the ABC News live chat. Those people's brains are toasted. Yeah, well, they're not given, they don't do research. Those people who are blasting out this information over the mainstream media, over the corporate media, they don't do research. Like, they might read some books or read some stuff themselves, but they're not coming up with the ideas to try and put information out there, right? They're collecting information that people have given them to do it. When I do stuff, I'm going and reading stuff from the Federal Reserve and saying, hey, look what I found, right? It's so much different. So all these other people, they're trying to guide the market, trying to guide the people's perception, in order for the monetary policy to be conducted in the way that they are feeling appropriate. I'm not following that. Like, if everybody was to follow this channel, like if this channel was so popular across the entire United States that it was like, everybody knew this information, their monetary policy would fail. Like, the Federal Reserve would fail if everybody knew what we knew, right? But because most people just have no clue about it, and in fact, even worse, they blame it on Biden, right? Which means that they're able to secure their powers, right? So long as people have that kind of thought to it, they will never blame the appropriate area or the appropriate people, or, even blame the appropriate thing, which is themselves, for not conducting themselves in the appropriate fashion, right? They would rather blame an external out there. All the powers that be in the way that they conduct themselves will continue. That's like, and it's just the way it is. Like, I mean, I don't know how else to describe it, except that, most people are so clueless about it. And in fact, they're not even just clueless. They think that they have a clue, and what they are blaming is something that is completely wrong. And so therefore, because they do it that fashion, it then gives the powers that be the position in which that they can then continue. It's just the way, yeah, All right, 400 people watching. My goodness, right on. Well, I got a few more minutes here. I was going to cut this off in about 7, but I got about 15, I guess I could go. All right, finally a rational take, yeah. I watch all different media, so get a sense of what the propaganda is. And that's really a good way to kind of go about it, too, is if you're looking to see, like, if you look across many media outlets, and you can say, wow, there's a kind of a theme going amongst all these guys. Even though they disagree with each other on a continual basis, there's one thing that they seem to be agreeing on pretty regularly, right? Like 2% target, right? I don't know how many, even within the Federal Reserve's own statements to the mainstream media, they talk about their goal of a 2% target. It's not real. That is not real. There is no 2% target. The Federal Reserve has no 2% inflation target. When they look at this number and it says 2.8, 2.2, 2 point whatever, doesn't matter, right? Because the Federal Reserve can care less what that number is. There is no target for them. They've eliminated that, right? It's a 2% average inflation rate over time. And since nobody knows exactly what the mathematical formula is for it, because not even the Federal Reserve has one, the 2% target is completely imaginary. It's like coming from the land of make-believe, right? You ever, like, literally what people, when people, here we go. Here's a really good way of looking at it. Remember SpongeBob? You know that show SpongeBob, right? You ever seen the episode where, maybe it was in the movie or whatever, when they had the orb of confusion? Remember that? And they would hold this orb and they would be like, that is what it's like to try and incorporate the 2% target, 2% inflation target into your strategy. It's like holding the orb of confusion because it doesn't exist. The Federal Reserve doesn't use it. Nobody within the Federal Reserve is looking at it for their monetary policy. It is completely imaginary. But what it does do is it gives the inflation expectation to the people. That's what the Federal Reserve was looking for. An inflation expectation that was persistently high. And I mean, you don't believe it? Go and look at John Williams' speech, Monetary Policy for a Low Neutral Interest Rate World. He says it right in there that the major problem that the Federal Reserve needed to solve these days was the risk that inflation was persistently too low rather than too high, and that monetary policy was always swimming upstream against a force of inflation expectation that was too low. Yeah. That was the Fed's problem. This is something that they had talked about way back in 2018, 2019. And then going into the pandemic, the Fed changed their view of inflation. And they said that we are no longer going for this 2% target, but going for a 2% average inflation rate over time. And we have no mathematical formula for determining what that is. And it's important to understand this. This was reiterated in the congressional hearing where they, like, the congressman, like, straight up asked Jerome Powell, when you get to 2%, you're going to adjust rates. No, that's not what we're doing. He said it straight up to them, and that they were going to review their monetary policy at the end of the year. So this is definitely the way they conduct themselves, and they're going to conduct themselves until the end of the year when they do a review of their monetary policy. Even Michelle Bowman just a week ago reiterated it in her speech, saying that appropriate monetary policy would have inflation moderately above 2% for some time. What does that mean? Nobody knows, but yet inflation is somewhere between 2 and 3%. That seems to be like what's moderate, right? I mean, is that an opinion? Is moderate 2.2, 2.4, 3.8? What's moderate? Like, I mean, comparing to what? 15% inflation, 2.2 isn't too bad, or even 3.1. I mean, who knows? What's moderate inflation? Nobody knows that. But understanding that's what the Federal Reserve is doing now makes everything that most of those strategists and everybody thinking about what the Federal Reserve is going to do makes them completely wrong. Makes them all the statements when they say or use the idea of a 2% target, and I don't like using this word very much, but that makes them ignorant. Straight up, they just don't know. Right? And that's sad because that's like 99% of like everybody out there. The Federal Reserve and their forward guidance with the credible threats in the idea of being able to push the markets around by simply using their words has worked. They got it. They absolutely nailed it with precision accuracy. And the more that people feel that the Fed has screwed up or failed, the more power that actually gives to the Federal Reserve in their monetary policy and the way they're choosing to conduct it, using their forward guidance and their words. Sony breaks the financial collapse feeling. It's just garbage. They feed the sheep. They just make it up as they go. I don't think so. I don't know if you're talking about Fed anyway. They need close to 2% inflation, never zero, to slowly boil the frog, to get the people very angry as of now. When will the interest rates rises effect kick in? How is Eurozone and U.S. holding up to the mountain of debt? I mean, how do they do it? It's just, I don't know, right? If you were to ask me a long time ago, I would have said that it wasn't sustainable, would have failed by now. However, the question, when will the interest rates effect kick in? Now, right? I mean, you're seeing it now. It takes 6 months to a year. I know that work in the retail space, I am seeing a major slowdown taking place during a time in which that I would generally see more ramping up of activity. All right. So to me, this is the higher interest rates now finding its way into the economy. And now over the next 6 months, we're probably going to really feel the effects of it. However, if the Federal Reserve puts out the forward guidance in a way that is, accepted by the people, clearly communicated, and given that credible threat, they might actually stimulate the economy just by simply convincing the people that they're going to be lowering interest rates going into the future, whether they do it or not, right? But if they could give that clear communication out there, it very well could work, for a while. I mean, eventually, they have to do something else, right? I mean, you can only forward guidance so much without actually doing the interest rate adjustments. But right now, you think about it, they had everybody convinced that they were lowering rates. Now they got people convinced that they're going to be raising them, right? But they haven't done anything. They just sit there and do nothing at all. Like nothing. Just sit there and talk, and then watch everybody scramble around to try and figure out what it is that they're going to do. All right. Take out government spending, we are in a very large depression, yeah. All right, Zillow has a lot of homes for sale, and they aren't selling fast, very slow. And I mean, comparatively to what? Comparatively to what we've experienced in the past, like recent past. I mean, there was times, I heard of people like, trying to sell a house. It would sit on the market for years, months and months and months, many offers, many looks, all kinds of, time. Like the idea of putting a house out there and it sells within a matter of hours, if not a week or something like that, or even a month, that's not realistic, right? Realistic is sitting on the market for months on end. That's a realistic market. We are not going into abnormal market. We're going into what would normally be a normal market. It's just that people aren't used to it. All right, Simon, you talk of Portland retail lumber dying out. I don't see this in Iowa, asking local lumber yards and even workers at Lowe's and Home Depot. Portland MSA unemployment is 4.8 in February versus 3.6 in October. All right. Well, I mean, you can go and find isolated spots. That's cool. This is the thing. Like, I couldn't use just the vision of my own lumber yard as an indicator of what's going on within the lumber market. Now, when I'm looking at May contracts right now that are sitting under 500 per thousand, and I'm looking at deals coming from my vendors saying, hey man, we got these particular lengths that are going at a special price. We have, certain items out there that are now in abundance while other ones are completely lacking. Yeah, there's issues happening. Right? There's definitely issues happening. Now, I could probably go find regions of this country in which there's no slowdown, there's no view of a slowdown, there's nothing like that happening out there. That's not the indicator of what's going on inside of the entire market, right? Now, watching the May contract, which would normally be a contract that I would think would be elevated, right? May lumber, May, June, July, these are like the months in which that you would want to really be ramping up in the framing. This is where you would think like a lot of homes would be started, but the contracts aren't reflecting that. So again, it's not, I can't use just my yard, and you can't use just any one location anywhere in the entire country, but you can start putting these pieces together to see a much bigger picture in it. What we got here? Misery for a year, then drag it out for 5. High-end projects always in fashion. All right, Simon, I'm newer to your channel. If I wanted to learn more about economics, what would your suggestions be on that? you're gonna have to just ask questions. Like for me, I didn't have any kind of one source that I went to just like like learn economics A B C D. Like to me, it didn't go down like that at all. For me, like I was sitting in front of my TV trying to figure out why it is that I lost my job and why it is that I was having a hard time making my house payments and trying to figure out what was going on during the great financial crisis. And I just kept hearing people talking about mortgage-backed securities and credit default swaps. And so finally, I just turned off the TV and I went to my computer and I typed in, what's a mortgage-backed security, right? And so I started reading up, like, started reading on what a mortgage-backed security was. And so once I kind of figured out what a mortgage bond was, and how it's like an accumulation of a bunch of mortgages put into a box and sold off to an investor, I was just like, okay. So I went back to the TV and they started talking about credit default swaps. So I turned the TV off and I went back to the computer and I'm like, what's a credit default swap? Right? So I started reading about that. Oh, it's an insurance policy for making an investor whole in case, the investment goes bad. And I'm like, oh, whoa. All these mortgage-backed securities had these credit default swaps on it. And oh man, and that just started getting my mind spinning. And so I just kept asking questions like, what's the Federal Reserve? What's fractional reserve banking? What's a bond? What's treasuries? What's yields? What's? And I just kept asking questions, and I would listen to as many people as I could listen to. And I didn't care what that they were talking about, as long as they were talking about money. As long as they were talking about economics or money, I didn't care if I agreed or disagreed. It didn't matter to me, right? I didn't have an agreement or disagreement. I was just taking in opinions at that point. And so I would just listen to everybody. I listened to a lot of Peter Schiff. Like Peter Schiff was my go-to guy for probably 6-7 years. Like I don't know like how much Peter Schiff I listened to, but it was pretty continuously and it was all the time. But after a while, I just started started researching the Federal Reserve itself and monetary policy, right? So I would read through speeches and find it very difficult to understand just about anything that was being said within these speeches. But, I would just read it over and over again, and then I would go and read through all the footnotes and try to figure out what it was that they were trying to communicate through these speeches. And, after I would read one, over and over again for a week or two, I finally kind of grasped what it was that they were trying to talk about. And the more I did this, the more I realized that I'm picking up ever increasing amounts of information. And pretty soon, I'm starting to make videos talking about the repo facility 6 months before anybody else was talking about the repo facility. Talking about how the Federal Reserve wanted a standing repo facility, and then come September of 2019, everybody found that it was a huge surprise that the Federal Reserve sets up the standing repo facility. And I'm like, that's not a surprise. That was something that we talked about months ago. I didn't know that that's what they were going to do, but it was something that the Federal Reserve had been talking about, so they knew something was coming, right? And this is why I read those speeches, is because they communicate what it is that's going to have, what they feel is taking place within the economy, but they can't come right out and talk about it, because if they did, it would flip the people out and they would then start losing their shit, and the Fed would lose the ability to conduct themselves in what they feel is the most appropriate fashion. But that repo facility of 2019, of September of 2019, that was not a surprise to me at all. It was a surprise to me that the whole thing was going down, but when they said, oh, we set up the repo facility to do this, it was like, yeah, you guys had talked about that. You guys had talked about that. I mean, nobody knew what was going on at the time, and even I was just like, whoa, what's this, right? But then when it got up in operation, I was just like, yeah, that's right. You guys did talk about this very thing here a few months ago, and we did a video on it called Things Are Changing, right? That's what I titled that video. I didn't know what was about ready to come. I was just reporting on something I was reading from the Fed, All right. What time is it? Okay, guys, I gots to go. I'm going to read one last comment here, and I hope you all had a really wonderful day today. This was a fun live stream. We got 165 people watching with 191 likes. Everything is broadcasted before it happens. None of us stick together, for that we'll all fail. What do you think about 30-year low of Japanese yen against the dollar? Will this keep on going? Do you recommend carry trading it? Man, I'm not much of an investor, but I'm thinking if there's a low in the yen, man, Toyotas ought to be getting cheap. Just saying. Yeah. Get a new Corolla. All right. The 3% wage increase versus 12% CPI is why it's all implodes. Yeah. I'm in Fort Myers and real estate is slowing. Alrighty, guys, this was a lot of fun. Appreciate you all being here. Thank you very much for hitting that like button. We got 197 likes with 429 people watching right now. Uneducated Economist. You guys let me know.